It's a very big deal for people who are wondering why the prices haven't taken off more than they have. The people accumulating it aren't bitching because they like getting a subsidized price. But once they have all that they will be able to receive before anyone else, when no one else wants to sell at the make-believe prices, you will see a transition to these other exchanges. And that's when the price goes parabolic, just like that. So yeah, I think it's a very, very, very big deal and something people need to think about when they are asking themselves, why hasn't gold and silver gone up faster than it has? And, look, um, in the end, I think gold and silver will go higher than anyone thinks possible.
Gold soared to a historic high of $2,195 per ounce on Friday, March 8th, marking a 5% increase year to date and a remarkable 19% surge over the past 12 months. This rally may surprise American investors, as it diverges from past events that typically triggered gold's all-time highs, such as the late 2000s financial crisis and the COVID-19 pandemic. AndySchectman, CEO of Miles Franklin, underscores the substantial accumulation of gold and silver by central banks and major financial institutions, indicating their acknowledgment of the metal's intrinsic value. Despite allegations of manipulation, gold has delivered an impressive 70% return over the past 5 years, showcasing substantial annualized growth. The optimism surrounding gold prices is fueled by hopes of U.S. interest rate cuts, a sluggish global economy, escalating geopolitical tensions, uncertainty surrounding the U.S. presidential election, and increased central bank purchases. According to data from the World Gold Council, central banks have been acquiring gold at a record pace since 2010, and this trend is expected to continue in 2024. Citi analysts have labeled themselves as medium-term bullion bulls, forecasting a 25% probability of gold averaging a record $2,300 per ounce in the second half of the year. Their base case remains at $2,150, with a wildcard scenario suggesting gold could reach $3,000 within the next 12 to 16 months. Schectman suggests widespread acknowledgment of artificially low Western gold and silver prices could surge their values, driven by realizing their true worth. Join us as we delve into AndySchectman's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
I think the world is very tired of the fact that the commodity exchanges are priced in dollars, but priced in a way that is suppressive, priced in a way where the commodity exchanges or the futures contracts control the price rather than the underlying commodities. And these are the countries who accumulate them all. These are the countries who produce them all, that consume them all. So once they've accumulated all of the commodities that they can pickpocket at pennies on the dollar, at that point they will stop accepting, because at that point no one is going to sell at the make-believe prices that the West give us. At that point, you will see a transition to places like the Moscow Gold Exchange, to the Shanghai Gold Exchange, to other exchanges across the globe that will fairly price these commodities, and it will signal the end of the ability of the West to have any significance or influence on the pricing of all of these commodities. And the fact that you have these finance ministers in the BRICS Union talking about this is exactly what I assumed, that they know exactly what's going on and they're just going to use it against us. So it's a very big deal for people who are wondering why the prices haven't taken off more than they have. The people accumulating it aren't bitching because they like getting a subsidized price. But once they have all that they will be able to receive before anyone else, when no one else wants to sell at the make-believe prices, you will see a transition to these other exchanges. And that's when the price goes parabolic, just like that. So yeah, I think it's a very, very, very big deal and something people need to think about when they are asking themselves, why hasn't gold and silver gone up faster than it has? And, look, in the end, I think gold and silver will go higher than anyone thinks possible. But I do want to also make one other point, at least in terms of gold. And you have euphoria in the stock markets, right? With NVIDIA and with cryptocurrencies. And there's no major reporting of gold. And I know this is a silver channel predominantly, but understand that gold and silver have a 90% correlation throughout all of history in their movement, right? So as one goes, so will the other. And look, let's just state facts. The central banks and the major banks have been buying gold and silver at a pace the world's never seen before. So these are the most informed people in the world. Gold's up $350 in the past 6 months, and that's 20% in 6 months. 6 months ago, the price was 18.20. Now it's 21.70 or whatnot. And even with all the manipulation over the last 5 years, gold has risen from $1,275 in March of 2019 to 21.70 or 80 right now. That's roughly a 70% return in the past 5 years. You divide 70 by 5, that's a 14% annualized return. And I just want you to know that my entire career, my mentor, Richard Russell, said, if you make 6 or 7% per year, you are a rock star. So here is a pet rock that pays no interest, that everyone says is an archaic relic of the past, that the central banks can't buy fast enough, that's paying a 14% annual return over the last 5 years at a period of time where everyone's bitching that it's not moving up fast enough because it's being manipulated. So I just want people to understand that, and the big money is letting it creep up little by little by little by little as they continue to accumulate it, but not fast enough. And once it becomes exposed to the whole system that the Western price is ridiculous because no one wants to sell it. Look, you're already seeing the arbitrage in China with gold up 80, 70, 80 bucks above the Western price, and silver up almost $3 above the COMEX in London price in Shanghai, which is incentivizing the sophisticated traders who can access both markets to buy in Chicago or buy in London and sell and deliver in Shanghai. It will never come back. This is all a process.
According to a report from the Russian news agency TASS, the BRICS group of nations is collaborating on developing an independent payment system, utilizing blockchain and digital technologies. According to the World Gold Council, central banks within the BRICS countries are increasingly accumulating gold as a hedge against the US dollar and its associated debt. The group is identified as the largest buyer of the precious metal. Mauricio Lirio, the Brazilian Sherpa, provided an update on the progress of the BRICS currency initiative, confirming ongoing efforts towards establishing a common currency. Lirio stated that discussions on this matter would be held at the upcoming summit, emphasizing the alliance's commitment to advancing the common currency and payment system. Andy highlights that the objective of the new currency system is to operate independently of the SWIFT system, thereby facilitating trade among participating countries without being bound by the limitations of existing international payment systems.
I want to talk about really in particular one thing, and it is in regards to a story that came out of Russia, out of a news agency called TASS, and it was an interview with a man named Yuri Ushakov, and he works at the Kremlin, and basically came out and confirmed what we already knew, that the BRICS nations plan to develop a new payment system based on blockchain. But what's really important to understand is the dynamics of it and what they know. And I want people to really pay attention here, because what he says to me is really, 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 really telling as to why gold and silver and all of the world's commodities are behaving the way that they are. So I'm going to read this to you so that you understand, rather than try and paraphrase it. We can talk about it in a moment. He says, all that leads to adopting a new international currency is that we really don't need to go large scale. BRICS is enough. He said, the idea of the currency is that there will be two baskets. One basket will be of national currencies of all the countries involved in the process, like the SDR, which is the special drawing rights of the International Monetary Fund, by the way, but with more clear and understandable criteria. Okay, so they're going to have a basket of a currency that's based upon local currencies and a basket of commodities. Now, we assume that main commodity will be gold because it is the world's only other tier one reserve asset. And the central banks have been buying it and repatriating it from the Bank of England and the New York Fed like it's going out of style, right? So we understand that, right? But here's the interesting part. Well, also he says it should be in a digital form, which means it can be used without the banking system. So it will be at least 10 times cheaper than the present transactions through banks and currency exchanges. And what he's talking about there is the Chinese have CIPS, the CIPS, which is the Cross Interbank Payment System, or Project M-Bridge, which was just utilized for a big trade it allows these countries to trade, whether it be currencies as they are now or central bank digital currencies outside the SWIFT system. That's what the Project M-Bridge is. And that was devised by or developed by China, United Arab Emirates, and I think Singapore. But so, first of all, he's saying it's going to be a currency that will be digital, that will be traded outside the SWIFT system, and it will be a basket of commodities on one end and a basket of local currencies on the other end. So that's what it is, right? But here's the important part, that it's the most important part of everything. And he says this: the second part of the equation is price. For the moment, price is determined by Western speculation. We produce these commodities, we consume them, but we do not have our own price mechanism, which will balance supply and demand. Anyways, he says, it's impossible to make any strategic planning for economic development if you do not control prices of basic commodities. Price formation with this new currency will get rid of Western exchanges of commodities. Now, I've been saying this for a long time, that the Shanghai Gold Exchange or the Moscow Gold Exchange or the exchange in Dubai will take over for the price-setting mechanism of the West.
A hotter-than-expected CPI report initially pushed gold lower, but strong dip buyers stepped in, driving prices higher. While bullish sentiment among experts has waned, retail traders remain optimistic about gold's potential for gains next week, according to the latest Kitco News Weekly Gold Survey. Considering the factors influencing gold prices, what might be the key drivers shaping its trajectory shortly? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.